Okay, we are recording. Welcome everybody again to the call. Great to have you on another Money Monday. We're going to recap what we did last week, which is the daily trading affirmation, which you should be able to see now on your screen. And then we're going to go through and look at the 10 things that we need to be really, really careful of, like the things we will not do as traders in this game. If we get a chance towards the end of this call, then we are going to look at some market structure topic points. Few people have been speaking to me about market structure. We looked at it yesterday on our kind of advanced traders group. And I think it's a really good thing for us to do today as well. So first things first, let's just recap on what we were looking at last week, our daily trading affirmations. I'd like you to either write this down or take a screenshot of this or look in the Simplicity group chat, scroll back up to some of the messages, probably about Thursday. I sent this into the Simplicity group chat and you should be able to get it there. Something that we should say every day: I am a master trader. I develop specific plans of actions that meet my trading goals. I exercise wisdom and patience in trading. I wait for the right opportunity to present itself. This is my favorite bit. I am paid to wait for great trades. Every trade entry meets my required criteria. I recognize trading opportunities quickly, clearly, and with great ease. I act decisively when executing my positions. Emotion has no place in my trading. I recognize loss as part of trading. I follow good money management principles that minimize loss and maximize gains. I attract wealth and abundance, and this is reflected in my trades. I trade with peace, confidence, and clarity. I am a master trader. Okay, so that's what we had looked at last week. I hope you all enjoyed that. I hope that was useful. We went and we explained it last week. We're not going to go and explain that all again, but please, please, please just write that down, copy it, look for it in the group chat, and try and say that. Just say that before you start your trading day. Say it and say it and say it and say it and say it, because this is going to get your head thinking in the right way. We're not chasing trades. We're not rushing after trades. We are paid to wait for the right trading opportunities. Okay, so that is our trading affirmation. Now, what I wanted to do is I want to look through the 10 will nots, all right? The 10 things that we will not do, kind of like the negative positives, if you understand what I mean. Things that we will not do as traders, all right? So this is a mindset call today, and it's cool to have these mindset calls. We do a lot of charting work, and we will do that afterwards. But for now, it's cool, I think, just to do a little bit of mindset work, all right? So rule number one, listen, we will not chase a move. Now, this is what you're going to see very clearly that some of these rules also match up with our daily trading affirmation. All right. So rule number one, I write them out on here. I will not chase a trade. Look, all right. I will not chase a trade. If I miss the trade, let it go. Right. In other words, if I say it this way, if you miss the trade, let it go. That's what it means. All right. If you miss the trade, let it go. So we'll keep that as our rule number one. Let me try and find a situation right here on this chart here. Here's a really good example of a time when you might have missed this trade. We know that what we look at in trading is we look for these areas of pullbacks, right? We look for a move and then a pullback, and we like to enter on the pullback. We look for a move, we look for a liquidity grab, and we like to catch this. If this is gone and we can't get in, it's no point trying to get in halfway up the curve. You've lost your opportunity on that at that point. So what we're going to say is, if we missed a trade, we missed the trade. It's okay. Listen to this, family. We are in a market that offers to us a never-ending waterfall of opportunity. Okay. Now, some of the big moves happen, and some of the big moves happen less frequently. But we are in a market that offers us a never-ending waterfall of opportunity. And all I'd like us to do is just to be patient enough to find those right opportunities, okay? I will not trace a trade. If you miss it, let it go, all right? Now, here's another one. Here's another one. Here's another one. Watch this. Let me open this one back up again. 2. I will not trade choppy markets. Now, you can take this for yourself if you want to. I think you should. I will not trade during choppy markets. All right. Now, can anyone tell me what's happening this week in the marketplace in general? Economics, I know there's a big one, but there's a really, really, really big one, but there's a couple of kind of smaller ones as well. All right. Let's see if in the chat, this is a good exercise. Let's see if in the chat you know what's happening on the economic calendar. I've told you about the economic calendar already. You should check it. If not daily, then you should check it at the beginning of the week. So let's see if you know what kind of things are happening in our data cycle this week. Let's see. So I can see some things coming through on the chat. Let's have a little look here. Okay. Okay, Simone, thank you. The US elections happening, exactly right. US elections, that's happening tomorrow, Tuesday, the 3rd of November. A very, very, very big data point in the year, much less in the week. So we know that we could potentially have choppy markets during the US election. Does anybody know anything else that's happening during this week? It's a very, very big week for data. Anybody know anything else that's happening this week? I'll just let it come into the chat for a while. Anyone know what happens on the first Friday of every month? The first Friday of every month, 1:30 in the afternoon our time, 8:30 in the morning in the US. Every single month without fail. There you go, Michael, my guy. Payrolls, non-farm payrolls. It's, yeah, employment, exactly right, Susan. It's the US employment numbers. It gives an indication the change of the employment numbers outside of the farming industry in the US. A very, very, very key piece of data. Maybe at least when I was in the banks, it was the piece of data that moved the market the most. The desk used to go wild on non-farm payrolls if the number was different to what the expectation was. So in this week alone, when we talk about I will not trade during choppy markets, we have got a US election on Tuesday. We've got the non-farm payrolls on Friday afternoon. Anybody know what else? I mean, you could have, by this time now, you could have searched the economic calendar on my FX book or on Daily FX. So there's a couple other really interesting pieces of data that are coming out this week. We've got the Bank of England who are speaking on Thursday. All right, we've got the Bank of England. I think that is the interest rate decision that's coming out on Thursday. We've got the Federal Reserve. Thank you very much, Sandra. We've got the Federal Reserve meeting. I wonder if that's true. I don't know if that will be the same day as the election, but there's definitely a Federal Reserve meeting this week. We've got the RBA, which is the Royal Bank of Australia. They're making interest rate decisions this week. So all in all, we have got a massive data week creating choppy markets. Now, what I would say is, of course, there are going to be trading opportunities in this marketplace. Of course, there are going to be trading opportunities in this marketplace. But what I suggest is that you trade very, very carefully. Right, it said here is I will not trade during choppy markets. You will not trade during choppy markets, but I suggest that if you do it extremely carefully. You must use proper risk management. Do not over leverage, just tread carefully. All right, these market can do very unusual things. The reason why we talk about choppy markets is, excuse me, the market doesn't behave in an orderly fashion. And as technical analysts, we do rely on the market moving within a certain amount of order. All right. And when the market moves in an orderly way, we can predict where things are going to go, where the price should come back to and where it should go to. But when markets are not behaving in an orderly way, like elections, like non-farm payrolls, like employment data, like Federal Reserve meetings, like the Bank of England announcements, it's like, for me, honestly, this week, it doesn't matter how good I might think I am. This week, I am treading carefully. I am going to be playing the extremes. Okay, I'm going to be playing extremes personally. I'm going to be setting up my orders so that if it hits an extreme and then comes back my way, I'm in. I don't want to be anywhere near the current trading range. I just want to be in at the extremes. Okay, so play very carefully. You could even say that I will not trade in choppy. I didn't trade today. I closed trades today. I reduced my position today going into the election tomorrow. The whole idea being I want to reduce my risk, wait until the volatility has come out of the market, and then when things calm down, go back to normal, then I'll start entering my trades again. And we should find some really good opportunities as a result of the volatility that comes in the next couple of days. Okay, so I will not trade during choppy markets. Number 3, we will not, let's write this down. I will not trade against the dominant energy. I don't even know where I got this one down, I wish I'd written down where I wrote this from or where I learned this. But I will not trade against the dominant energy. Effectively, that means I will not trade against a trend. All right. Number 3, I will not trade against the dominant market energy. All right. That means trade with the trend. Really important. You got to know which side of the market you are on. And when we come to the market structure part of this call today, you'll get a good idea of how you can stay on the right side of the trade. All right, stay on the right side of the trade. All right, we will not trade against the dominant market energy. We do not trade against the trend. Okay. I will not trade too much of my account size. Right. I like these negatives sometimes. I like negative positives. It's like you got to protect yourselves, right? You could say, I will always use proper risk management. That's what the affirmation says. This is like the counter side to the affirmation, the other side to the coin, all right? It says, I will not trade too much of my account size. I will not trade too much of my account size in any one trade. All right, let's call it that, in any one trade. Now, if you have been on these calls since we started doing them, we must have started these calls weekly since March. Maybe we're gonna have a break soon. I don't know, but we've been doing these every single week since March. You would have known I've done a risk management course, a risk management lesson on one of these Money Monday calls. I highly recommend that if you haven't watched that, you go to my new YouTube channel and you take a look at that on when I finally get it uploaded there. Right, these new videos are going to be uploaded to a new channel as of this week. So just ask me for that risk management video, and I'm going to make sure that you can get hold of it. It says, I will not trade too much of my account size in any one trade. Is the same as in the affirmation where he says, I follow good money management principles that minimize loss and maximize gains. It is the same thing. All right. And I want to say, let me be really clear with this affirmation. This was from a guy, I can't take credit for this at all. This is from a guy, a friend of mine called Ballet Granville, who's one of the educators on the I Am Mastery Academy. Right, Ballet Granville. Right, that's he was the one who wrote that. Okay, so I will not trade too much of my account size in any one trade is exactly the same as saying I follow good money management principles that minimize loss and maximize gains. Keep this close to you in your thinking, especially this week in choppy markets. Okay, make sure you're with the trend. Don't really trade in choppy markets, and if you do trade this week, make sure that you're using proper risk management. Okay, here's a key one. Here is a key one. I love this one for me. This is such a key one, right? I'm not even gonna say it, I'm gonna type it. I will not trade just for the action. Listen, this is such a super cool one. Some of us are trading and teaching, mentoring, and doing the network side of this business as a full-time. It's a combination of all of those all of those things. And sometimes we feel that we need to be in a trade just because, well, I'm a trader. That's what I do. I'm supposed to be in a trade. Well, actually, this is the wrong way to think. It says over in the affirmation, we are paid to wait. We are paid to wait for good trades. That's our job. Our job. Can you imagine that? Our job is being paid to wait. That's what we're supposed to do. So do not trade just for the action. Don't click on the button just because you want to be looking at your trade blotter, whether it's going up or whether it's going down, whether your account size is going up and going down. This is not the way to do it. Please, guys, trust me when I say this. As somebody who's been doing this for a little while, very soon you'll understand, look, I just don't need to be in the market all the time. I want to be in the market at the right time with the right trades, which I found with proper risk management. Okay. So we're not just trading for the action. What we're going through today is proper hardcore trading psychology. If we get these things in our mind, what happens? The outcome of thinking like this is that you become balanced as a trader. Trading has the tendency to really play with our emotions. Yeah, you're super happy when you're winning. Trust me, you know how it goes. You hit a bad boy trade, no drawdown, and it goes in your favor straight away. You're like, I am the king of this game. I finally clocked it. I know how to do it. Let me go play golf with the boys. It's steak dinner this Saturday. You feel sweet. right? You feel sweet when you hit those trades. And equally, when you hit a bad trade or you're losing, then you're snapping at the family, or you don't want to be, you just don't want to be a good person around. You're impatient, you're irritable. It's like, we can't live like that. We can't live like that. So we got to get our psychology right as traders. And I say over and over and over again, this trading game will reveal you to yourself. It will show you it will show you really hard. And you will have to become a better person all around if you want to be in this game. All right, if you want to be in this game. So we're not going to trade just for the action. Very, very, very important. This is a business. Okay, if you are a gambler, then okay, you can exercise your fetish for gambling through the marketplaces, but you're not going to go too far as a trader that lives off this game. If you're looking at it from a gambling point of view, every business has a business plan, it has a structure, and you should have a plan for your business. I currently use a tool which is called Edgewonk as a plan. I've just sorry, excuse me. I literally just loaded this. Let me quickly share. I've been speaking about it for a long time. I've mentioned it over and over, but I quickly just got the demo of this tool, and I'm actually going to do a lesson on this at some point in the future, because this tool is the nuts. It allows you to actually plan your trades. It allows you to actually prepare in advance, plan your trades, and it costs like $200 for this tool. All right, so this is a really, really, really worthwhile investment. As you can see, I've only just got one line in here. I've actually been configuring this through the settings so that it actually matches exactly how I want to trade. All right, so you can configure this, let it give you all the information that you need. Let it give you all the information that you what am I trying to say? Sorry, I made a mess up of that in my head. I was thinking about my FX book. What this allows you to do is to plan your trades in advance in the way that you want to find your trades, and that when they come, you can keep your mind really, really clear on what this trade was planned to do without being swayed by the change in the market price. I hope that makes sense. Okay, so I'm going to go back to the other screen. Okay, cool. So we're not trading just for the action. This is a business. This is a business. Okay. The other one is like, I'm going to join this one. I've got one here that says, I will guard my capital. I'm going to join that in with number 4, because it's basically the same thing. And I think this is a nice, yeah, let's just add it on. I will guard my capital. All right, risk management. Basically, this is a risk management one. All right, you just can't go wrong with that. All right. Okay. Here we go. Michael said the trading affirmation is so good. It really is, man. It really is. You're in the simplicity chat, right, Michael? You're in that chat. If you scroll up through to Thursday, then you'll actually, I think it's Thursday. I put it in there. You should see that in there in the simplicity group chat. This one here in number 6 is, I will never trade in a state of panic, anger, or to recover loss. I'm going to write, I love that one. I will not trade in a state of panic, anger, or to recover loss. Let's just change that, or revenge, yeah? i.e. to recover loss. This is super cool, because we've all been in those moments when we've lost the trade a little bit, or we've been stopped out, and we're like, oh no, I know if I just kept my trade in for a few more pips, and we go back in again, the market continues to go against us. And you're like, no, you double up and you go back in, the market continues to go against you. Before you know it, you've turned a 2% loss, which is manageable, into an 8% or a 10% loss, which is really, really, really annoying. Okay, so the key is, we are going to treat this like a business. We are going to plan our trades. We're not scattergunning, looking in the market. Here's a trade here. Here's a trade there. We are planning our trades ahead of time. We are waiting for the market to come to us, because we're paid to wait. And we do not trade in a state of panic, anger, or revenge. We do not trade in a state of anger, panic, or revenge, right? And that state of panic could be when you're watching the market move and you're like, oh my God, the market's moving without me. I better jump in now. And before you know it, you're buying at the top or you're selling at the bottom because you're just like, you don't want to miss out. There is this fear of missing out in trading. As it still happens to me. I'm telling you, as I know these rules. I know these rules, but you know, I'm practicing. I'm still not the perfect article just yet. I have had experiences where I'm like, okay, the market's leaving, it's leaving. I need to hit that button. You hit the button, and then I'm telling you, you're buying at the top of the market. And all you have to do is just sit back and wait for what you know the market needs to do, which is to impulse and correct, impulse and correct, impulse and correct. Just sit back and wait. We gotta be cool. We gotta be cool with this game, okay? We gotta be cool with the game. It's a game of chess. It's not a sprint. Okay. I think we've got one or two more. This one here, number 7. Sorry, that should be number 6, shouldn't it? What am I doing, man? Oh, thank you, Michael. 7 should be number 6. Yeah, that's right. Okay. Okay. You never trade from state of panic, anger, or revenge to recover loss. We will not. Oh, come on. I just told you about getting super excited about trades that you win. I will not get egotistical. Please. Let's stay humble, even with the wins. You know, one of the things that drives me mad, one of the things I really, really don't like about trading and in these trading groups, one of the things I don't like when people come in these trading chats showing their MetaTrader 4 with the trades that they won, right? With the trades that they won. It's kind of making me laugh, right? Because some of them are okay because you know that they're not doing it every single day. And it's just like, you know, thank God I made a really, really good one here and they want to share the love. Okay, cool. No problem. I had one of those the other day. Celebrate the guy. He had a super good trade. We want to celebrate the super good trades. Okay. But what I don't like are the guys who constantly come in with the trades that they won. And you ask them about the trades that they lost. You can't see the trades that they lost. You can't see the trades that they lost on their account. You just can't see them. You never hear from them when they're losing trades. But when they're winning trades, all of a sudden, the ego goes a little bit through the roof. Okay, the ego is through the roof. The worst thing for me is that they didn't send out the trade suggestion before they took it. So they've taken the trade suggestion, eating steak dinners by themselves, and not sharing the love with the family. Okay, the point being is this: we got to stay completely balanced in all things in this business. We've got to stay completely balanced. All right. That's why you'll see with me sometimes on the chat. Like yesterday, we had the advanced traders chat, and even in the back testing wasn't working out. And I had to be honest, say I was back testing. This is where I would have traded. Got stopped out on the back test. Okay, well now I would trade here. Anybody that was on the call last night would have seen that one. Oh, got stopped out. Boom, again. This is just how the market works sometimes. Okay, so you'll see the trades when I win, but you will also see the trades when I lose. But either which way, I'm not going to get egotistical if I get super good at it, and I'm not going to get super depressed or up against myself if I am losing. This is a constant game of evolution. We've got to get better at this game all the time. All right. No matter what it is you do, no matter what profession you do, please. How many was that? Please. That was 5 pleases. Yeah. Please don't come into this industry here and think that is any different to any other industry. You can't go and pick up a wrench and some pliers and expect to be a plumber in 4 weeks. It's not fair. Okay, you can't go and take a screwdriver and some type of tool and go and connect yourself and pretend that you can be an electrician in 6 weeks. You will literally kill yourself, right? And what I want to say is, in terms of this industry here, please be respectful to everybody who's gone through the pain. Please be respectful to everybody who's gone through the pain, and don't think you're going to come into this industry and think that just because you started studying for 4 weeks and you understand the basic principles of higher highs and lower lows, support and resistance, that now you're all of a sudden going to be a trader. When certain ones of us have been studying this game and continue to study this game hard so that we can help the team, so that we can deliver stuff to you. Please, guys, just cool, man. This is a long-term journey. And if you get it right, the income potential is uncapped. That's why we keep learning. That's why we keep studying. That's why we keep fine tuning everything. There's no industry you can go in. You can't go in and be a junior doctor after 4 weeks. You can't go in and be a nurse, or you can't even be a driver of any type, or much less a racing driver. You can't go be an elite sports person. You can't be elite at anything in 4 weeks. All right. You can't be elite at anything in 4 weeks, or even 6 weeks, or even 6 months. So let's go. Let's take the journey, family. And we will get good, and we will get elite, and we will be professionals, but let's just take the journey, and we will never, ever, ever get egotistical on this journey. There is always more to learn. Let's add that here. Let's add that here. I will not get egotistical. There is always more to learn. Okay, cool. All right, let's see if we can just get 2 more. Okay, let's do 1 more. Last one, number 8. I'm not too sure about this one. We can get good at this. I will not place my stops too close. Leave this one as a little bit of an offshoot. Or, you know what? I'm not even going to do this one. I don't like that one. We're going to leave it at 7. Okay? Those are our 7 keys. I like the number 7 anyway. I was born on the 7th day of the 7th month. Yeah? So I like the number. I like the number. There you go. I just gave you all my birthday. Okay, cards in the post. N21 2LU number 25. Yeah. Okay. All right. Listen, guys. Listen. That's it. Let's just recap that. Okay, and we'll see how these 2 things match. I'm going to read the first one, and then I'm going to read the second one. We're going to move over just onto 5 or 10 minutes of market structure after this. Daily trading affirmation. I am a master trader. I develop specific plans of action that meet my trading goals. I exercise wisdom and patience in trading. I wait for the right opportunity to present itself. I am paid to wait for great trades. Every trade meets the required criteria. I recognize trading opportunities quickly, clearly, and with great ease. I act decisively when executing my positions. Emotion has no place in my trading plan. I recognize loss as part of trading. I follow good money management principles that minimize loss and maximize gain. I attract wealth and abundance, and this is reflected in my trades. I trade with peace, confidence, and clarity. I am a master trader. That is from Ballet Granville, one of the I Am Mastery Academy educators. Okay, and looking over onto our I will not. Let's call this the 10 commandments. Yeah, I know there's only 7 of them, but that's the joke. Get it? Yeah. 10 trading commandments. Okay, cool. All right, cool. Number 1, I will not chase a trade. If you miss it, let it go. All right. I was going to start breaking out into the Frozen song, Let It Go, but I won't do that. I won't do that. I will not trade during choppy markets. This week is a great time to consider that one. We are expecting we should be expecting volatile markets. You can find the expected volatility of the market by looking at the VIX index, the VIX. Go into your trading view, type in VIX, and it will give you, it's called the volatility index. It tells you when things are starting to get, when the waters are starting to get a little bit choppy and when they're calming down. Okay, VIX is the volatility index. Number 3, I will not trade against the dominant market energy. I like the way it says that. We always say the trend is your friend, but I really do like that expression. I will not trade against the dominant market energy. Okay. Oh my God, I just saw your daughter, Michael. 777, you know. Wow. That's a blessed birthday, you know. I was 7774, so I'm, you know, close, but that is a really beautiful birthday. Wow. Okay. I will not trade against the dominant market energy. Trade with the trend. Number 4, I will not trade too much of my account size in any one trade. I will guard my capital. Very, very, very important. And I will not trade just for the action. All right. I will not trade just for the action. I will not trade in a state of panic, anger, or revenge, i.e. to recover loss. And I will not get egotistical. There is always more to learn. You know what? I'm going to save this. I like this so much. I'm going to save this as a template. 10 commandments. Boom. Okay, that's done. And I'm going to save this as well. Should have done that a long time ago. Save as. Boom. Okay. There we go, guys. Listen, I really, really hope that's useful for you in terms of the psychology of how we're going to be thinking as a traders, right? This is a mind game. Listen, if there ever was a mind game, this is it. It's just that this mind game puts money in your pocket. Okay, so play the game, be mindful, obviously be mindful, and let us balance our emotions, balance our thinking, and making sure that we're able to trade with a good mindset. Okay, with a good trading mindset. Okay. Do we want to do that market structure today, or are you happy with that? We don't have to. You want to look at that real quick? Michael said yes. All right, if Michael said yes, then we're doing it. Okay. Right, I'm going to delete that off the screen. Okay, quick segue into market structure. This is one of the things that we were looking at last night, although we are looking at it on a different chart. I'm going to draw it first. Okay, boom. All right, market structure lesson. We've kind of ended the trading psychology now for a little while, and now for the next 10 minutes or so, we're just going to do a very, very, very simple market structure exercise. Let's do it like this. This is going to be a market structure exercise. You've heard me say over and over and over again, no matter what skill you are trading at, you're going to need to practice that. You're going to need to do drills. And this is a market structure drill. Okay, so what we're going to do is that we're going to see market goes up, and then it retraces, and then we get another impulse. Okay, now this is what I'd like you to do. I'd like you to find an uptrend. I'd like you to find an uptrend anywhere in the marketplace and mark your first higher high. Mark your first higher high, and then mark your first lower low. And then mark your first higher low. Now listen, you're going to see something really interesting. You're going to see that, and here's the real key. This bit here, let me just think of the best way to do it. Okay, cool. Let me do this another way. Okay, then we're going to get a higher high here, all right? We're going to get a higher high here, and then we're going to see the market retrace. All right, now watch this. This is the important bit, and this was a little bit of a clincher for me the other day when I really clocked this. At this point, a lot of us would be tempted already to mark this area here as a higher low. We'd be very, very tempted to put that on the chart already, just because we've seen it dip. We'd be tempted to say, okay, well, there's our higher low. Why? Because this bit here is higher than that bit. But listen to this. The market will sometimes go up here like this and stop, and do this kind of move. All right. Now, what's happened here is that this high has not exceeded this high here. It has not what we call broken the structure. This is super important for your trading. All right, here is what we call structure, and this is the structure of an uptrend. If the peak stops here, let me just remove that because we don't need that. If the peak stops here, we can't label this a higher low yet. We can't label this a higher low, because what we might be seeing is we might be seeing the market getting ready to reverse. In which case, we've got our first lower high, and here we've got a lower low. All right, this is a turnaround. So what we need to see very carefully is we need to see this impulse after the dip. We need to see this impulse exceed the structure. And at the point where this impulse has broken this structure, now you can put on your higher low. Okay? I'm going to take a step back, and I'm going to take a step back and explain that. Okay, let me take a step back and I'll tell you the reason why. Rewind. At the point where the market is in here, all right, and has not made the higher and has not made this higher high yet, we're in what we call a range. We're in what we call a range. And the range at this moment sits in between this line here. I'll just try and get this line a little bit straighter for you. This is the key, and this is the reason why to mark your charts like this in market structure. The range sits in between this higher here, which we know is a higher high because it's broken this structure, and this lower low here. And we know that's a lower low because this high broke the structure. So that is our range at the moment until this line breaks. But for as long as this is in here, we're in a range. And so we want to be very, very precise about where we enter our trades in this range. It's quite possible, and it happens very often, that the market moves back into about 75% of the range. So here's our Fibonacci retracement. If we take our Fibonacci from the low to the high, oftentimes we'll see this market move into about 70%. It happens a lot, right? In between 61 and 70, and can go deeper sometimes too. Now here, in terms of how we're going to play the game, anywhere in this area here is where we want to enter our trades. And we want to enter our trades with a stop loss below the last low. All right. Red stop loss is going red. So let me explain again. Until we see a break of this line here, then we're playing a range that sits in between this high and this low. We're playing the range. Okay, that's the reason to mark it out like that. Okay, so this could go up, it could go down, and this happens a lot. It could go down into this area, sometimes a little bit lower. It could go up again into this area here. All right, and look, you still have not made a higher high. What you've started to see looks like a turn of a downtrend. But as soon as you see that, okay, now you can change your range. You can change your range. This break means you have got, a higher high. And it means now you've got a higher low. All right. Now you can change your range. The range that we want to play now is from here to here. That's our range that we want to play in. Now, what happens if we see this range broken? Now we start to think that the market is changing its direction. So let me recap all of that real quickly. All I would like you to do as your drill this week, we're going to wrap up and we probably will finish 10 minutes early, 5 minutes early. What I would like you to do this week is to find an uptrend. Find an uptrend, let's say market structure. Find an uptrend. higher highs and higher lows. Mark your breaks of structure so you can see where the market is moving beyond the previous range. Okay. And then the last thing I'd like you to mark on the chart, please mark your equal highs and equal. All right. If you feel super confident, you can do that the other way around on your downtrend with the lower highs and the lower lows. Again, mark your breaks of structure, mark your equal highs and your equal lows on the downtrend, but just start with an uptrend for now. Mark your higher highs, your higher lows, just like this. I'll show you on a real chart actually. Okay. Just literally just mark it out like that on a real chart. Mark out your break of structure like this. Text. Just call it BOS. There's another one here. Yeah, mark it with a nice little arrow and call it BOS. All right. Let me show you what that looks like in real life. Does everybody understand that? Is that clear? Does everybody kind of understand that drill? Is that cool? When you found the higher high, then just mark out your range. Do it however you want. Take a trend line, new range. You can do it like that, or you can take a box and do it like that. However you want to do it, okay? Let's see if we can do that in practice. Let's see if we can do that in practice in an uptrend. One second. Sorry, I'm just trying to find an appropriate move. The one key thing here is that we are looking at the bodies of the candles, okay? We're looking at the bodies. We're not looking at the wicks. Very, very important point. We're looking at the bodies for the break of the structure. Okay. Let's just use this area here, okay? All this area here. So here's the drill. Okay, sorry. Maybe there's a better one. Look, this is cleaner. This is much cleaner. We'll do it over here. Same exercise and we'll do it over here, okay? All right. Okay, look, starts like this. We'll do a very, very quick drill and then we're going to end up. This is the drill that I'd like you to do. This is the drill that I'd like you to see if you can do it. Just practice it, okay? Don't worry if you don't get it right perfectly first time around. Just practice this. If you do it and you'd like to send the markup to me, I'd be more than happy to look at it for you. Okay, so look, take your arrow, boom. Here is the break. Here is the first break of structure. See that? Okay. We can call this that the market breaks the structure here. All right, boom. So let's call that a BOS, a break of structure. And therefore we've got a swing low. Swing low is like the real low, okay? That's like the real low. And then after the swing low, what you've got is I know you all know this one. You've got a higher high. That's the first higher high because it's a break of the structure. And then now, because we've got a higher high, we can now call this, we can now call the swing low. Okay, we can't label this yet. Okay, we know that it is a higher low because we can see the chart. But the only time we can call this a higher low is once we've seen the break of the structure. I hope that's really clear. I hope that's really clear. The only time we can put the label on here is when we've seen the break of structure. Now, once it breaks, now we can call this a higher low. Here's the break. I'm just going to do it as an arrow for now. All right. Can you see that this candle closes above here? This candle closes above here. That calls that a break of structure. So now we can call this a higher low. Okay, boom. It goes up, it goes up, it comes down. Look, can you call this a higher low here? You can't call this a higher low here. Effectively, we're still in this range. We're still in this range. So once we've got the higher low, we know that this is a higher high. Let's mark that here. Now we know the range that we're in is from here to here. You really should do this on a back test. I don't know if you've got the back test button. If you haven't got the back test button, you just have to play it out like you were, like this, all of this didn't exist already, okay? If you haven't got the back test button. Okay. Sorry, that line's in the wrong place. That should be here. All right, so we see the dip. We see the dip. Can we call this a higher low? Let me take the price away. Let me take this. Let me just do it like this. I don't know if you all have this tool. I have. That's why I didn't use it. So I don't know if you all have it. At this point, we can't call this a higher low yet. We can't because we haven't seen the break of the previous high. So we just have to leave it. For all we know, this price could be working its way back down into the range. For all we know. So we got to leave this. We can't label this a higher low area. We can't label this a higher low yet until we see, my mouse has really been a bit weird today, until we see the break up here. So let's check it real quick. At the point where it breaks, then we can say, okay, cool, we found a higher low. It didn't break that. That was a wick. That was another wick. And there you see the close. Once it closes, now, then we can call it higher low. Once we call it a higher low, what do? We change our trading range. All right, so our trading range is not down here anymore. Our trading range is from here all the way up here. That's a big change. Left a lot of what we call imbalance underneath it, but it's a good practice. Let's see where this ends before we see a retracement. Let's see if it starts to go back in. Okay, as soon as we see that, can we call it a higher high? Yes, it broke structure. This is the game, okay? If you've got the replay tool, then just play the replay tool. And really what we're doing, all we're doing is we're speeding up the real market. We're just speeding up what happens in real life. And what you want to be able to do is you want to be able to do this in real life and say, okay, cool, we've just seen a new higher high. We're in a new trading range. We've seen a new high low. We can move the range a bit. The whole point of this exercise is really just to train your eyes so that when it's happening in real life, you are able to see it and mark your charts accordingly and know what trading range you are in. Okay, let's keep it rolling, keep it rolling, keep it rolling, keep it rolling, keep it rolling. We've marked that higher high. Did we see the break? Boom. At the break of structure, here's the break right here. Mark the break. It's a great exercise. Even as I'm doing it now, it's a very good exercise. Mark your break here. All right. Mark your higher low. Sorry. Mark your higher low, change your range. Now you know that the market is playing in between here and here. I'm not showing you how to find trades in this area right now. We should be looking for a trade a little bit around this area, right? It's not about finding trades. It's just about understanding the market structure, how the market plays. Let's play out, see what happens. Come back in. Did we see a break? Oh, close, 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 close. Okay. It's just stuck in that range. Look at that. You see how that range, look at how long it just respects that range for. I haven't planned this. And so we can't call this a higher low yet because it hasn't broken this structure, right? The only thing we can do is call this a higher high at the moment. That's the only thing we can do. We got the higher high because it's broken this structure here. I should have labeled that already. All right, let's play it out. And then I know we're a bit over time or we're close to overtime. What do we see? Do we see a break up or do we see a breakdown? Look at that. Just stuck in the range. Boom, we saw the break. Okay, so now that we've seen the break, what do? We mark up the chart. We've got a higher high. And now have we got a higher low? Where's the higher low? Here's the higher low. And then what do? We change our range. We know we are in an uptrend. I don't know if this is the actual high, sorry, but I've just marked it there because I've paused it. Okay, guys, I hope you can rewatch this. You can replay this part of the lesson, and then and then really get this drill. The drill is kind of serious. You see how then you see the break lower. Now we're on the way down. All right. I don't know if that's clear. I don't know if I made that clear, but that is the exercise. Did I lose the exercise? Let me see if I okay, okay, so here's the market structure drill. Find an uptrend. Mark your higher highs and your higher lows. Mark your breaks of structure. I didn't mark any equal highs and equal lows on this one, so let's just leave that off for now. Let's say mark new trading range. All right, and observe. If you have got the replay tool, it's really, really, really good. Sorry, I don't know what happened there. Pressing F11. If you've got the replay tool, it's really good to help you play that out as though it was happening in real terms. Now, I used the 1 hour chart to do that. If we can get down to doing that on a 30-minute chart, on a 15-minute chart, then we're nice, guys, right? We're really, really being able to see how the market is moving on a very, very, very fast time frame. I hope that helps. I hope that drill helps. Find an uptrend, mark your higher highs and your higher lows, mark your breaks of your structure, and mark the new trading range, and observe and see what happens in that trading range. Okay, guys, listen, we are done for another Money Monday. I hope it was useful. I hope it was useful. Michael says, okay, questions in the chat. Questions in the chat. How did you identify the first break of structure? I see you, Sandra. Okay, let me just quickly go back. We were looking at the 1 hour chart. Boom, 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 boom. This one here. All right, let me just show you, Sandra. This one here. What I looked for the part where the low kind of started to turn around, and I just looked for the area where the candle closed above the last highs. And these were the last highs. I was just looking for the area where the candles closed above the last highs, which was somewhere around here, somewhere around there. Candles closed above the last highs, which kinds of gives us a clue that we're starting to turn around. Just in the same way as at the end of this, we saw that the candle closed below the last low. This candle has closed below the last low. And so we could equally say that here is a break of structure to the downside, right? We could equally say that there is the BOS, boom. There is the BOS to the downside. I hope that kind of makes a little bit of sense, because this has broken the structure of the last low, right? Super. And guys, oh, sorry, Simone, you got a question? Go ahead.
Can you quickly switch it to the line graph just to satisfy my curiosity?
That is you are clever. I always knew you were clever. That is a great, great, great thing to do. And there you see the break. Yeah. And you can see here, and that's why that's a very clever thing to do. And that's the reason why we use the bodies of the candles, because the body is where the actual close is. And you can see that on this little one here, we didn't really get below it. On the first chart, I said mark the equal highs and the equal lows. Well, this would have been an area where we marked the equal highs and the equal lows. All right. But using a line graph is a really clever thing to do. In fact, you can even turn off the candles and do this exercise on a line graph. It's actually not a bad thing to do at all. That's a really, really good point, Simon. Did that satisfy your curiosity? Yeah? Okay. Wow. Wicked. Cool. All right. Everyone good? Everyone good? Any more questions? Any more questions? In the tool, I think the replay tool is for TradingView Pro. Yes, that's correct. Costs about £10 per month or something like that, but well worth it. Well worth it. Well worth it. Okay, cool. Sandra's got it. Guys, we're done. I love you guys. Listen, last thing I need to say to you today. Well, last two things very, very quickly. Please make sure that you're going on Go Live. Go Live is a resource of just wealth and information about this stuff. As I continue to learn, You know, one of number 7 on our 10 commandments was, you know, don't get egotistical. And I'm like, I know that I don't know everything about this game. I continue to learn. And one of my prime areas for learning is on Go Live. So please, please, please just go through the videos on Go Live. Look at guys like Abel Melendez. Look at guys like Rock Kumar, R-O-K Kumar, K-U-M-E-R. Amazing, amazing, amazing. Look at guys like Zach McDonald, and look at guys like Zachary Hogan and Jordan Morgan. These are phenomenal teachers, man. And I watch these guys and really learn a lot. So number 1, please, please, please keep going on to Go Live. Number 2, we have our IM virtual convention happening this weekend. Friday is all education with the Go Live educators. There's a full list of them. If I had prepared it a bit, if I had prepared a bit more quickly, I would have sent you, I would show you the schedule, but I'll just tell you for now. Friday is all Go Live educators. All of your favorite Go Live educators are going to be on Friday. Saturday, we're going to be listening to the CEO, Chris Terry. We've got Floyd Money Mayweather, who's coming through to give us a keynote lecture. We've got Eric Worre coming through, maybe the #1 network marketer in the world. He wrote the book GoPro, this book here. I don't know if you can see it, GoPro. This is going to be an incredible convention. Tickets are like, it's an online thing via Zoom, but it's like £17 for the weekend to get your access. It's $25. So please, please, please go on to your im.academy, your homepage, and just pick up a ticket to give you access to a full weekend of trading information. Okay, you can't beat it. So that was the 2 things I wanted to say today. Go Live, the convention that's happening this weekend, and of course keep using the tools and services. They are there to help you make money. Guys, I'm done for another week. I'm going to go have some food, go chill out. I hope you have a profitable week. Who's going to win the election? You're out there, Michael. Who's going to win, man?
Biden. That's my hope anyway.
It's looking that way, isn't it? It's looking like Biden's going to take it.
Yeah,
Who knows? So. I'm not. Of course, I'm not giving you my view one way or the other. No.
Yeah. Well, if Trump wins only 4 more years, he can only go for another 4 years, right? So
I'm not
just sure. Down, man.
They say it can only go for another 4 years, but there are loopholes in that US Constitution, and that guy will find them, man. I'm telling you. I hope it's a blowout win. Even if it's a close election, it could be trouble. So let's fingers crossed that whoever wins, they win on a blowout, man. Let's hope it's a clear decision next week, guys. Have a great week. Stay in touch with me if you need anything. Michael, I saw your message from earlier today. I will respond. Stay in touch with me if you need anything, and I look forward to seeing you again later on in the week. All right, God bless and have a great week. Take care.